Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 cheap, strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that come in with a strong buy rating and are also all priced under $10 per share. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Of course, some of these cheaper stocks can be extra volatile, so please make sure you always understand the risk versus reward and are doing plenty of research and due diligence. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 cheap, strong buy stocks. First up, we're taking a look at Hecla Mining Company. Their stock trades under the ticker HL, currently priced at $5.68 per share. Year to date, the stock has gained over 15%, and in the last 3 months has climbed over 34%. Hecla Mining is involved in the production of silver and gold and several other minerals, and they've been responsibly producing essential metals since 1891. The company is the oldest silver company on the New York Stock Exchange and the largest U.S. silver producer. In fact, they produce more than 45% of all silver in the United States. And with the potential to increase their silver production to 20 million ounces by 2025, they're also expected to become Canada's largest silver producer. They're also number 3 in lead and zinc producing in the U.S. Hecla shared their Q1 earnings report back on May 9th, and the company did come out with both an earnings and revenue beat. For their Q1, they reported earnings per share of 1 cent, beating expectations by 2 cents per share, and sales came in at $189.5 million. The company produced 4.2 million silver ounces, which was an increase of 43% from the previous quarter, and management noted that with a strong start to the year, they're well positioned to achieve their production and cost guidance for 2024. And following that last quarterly report, we had several Wall Street analysts weighing in, one of them from CIBC, raising their price target. They said that silver has punched through the key psychological level of $30 per ounce, and they adjusted price targets to reflect the multiple expansion that has benefited the silver group. The new target multiples reflect a strong Q1, as well as continued strength in silver fundamentals. The Hecla stock currently has 7 analyst ratings, coming in as a strong buy based on 6 buys and 1 hold. Analysts' average price target comes in at $7.11, which would imply an upside potential of over 25% from current prices. And looking at our list down below, we have several price targets actually on the low end at $6 for an upside of 8.3%, and one high-end price target here from H.C. Wainwright at over $10 per share, which would be an upside of 85%. Our second cheap, strong buy stock is also related to the mining industry with Sandstorm Gold. Their stock trades under the ticker SAND, or S-A-N-D, currently priced at $5.59. Year to date, they've climbed 11.8%, and in the last 3 months have grown nearly 19.5%. Now, Sandstorm Gold is a little bit different as they are a royalty company, so they own royalty rights to mining operations around the world. Rather than operating mines themselves, they provide an upfront payment in exchange for future revenue or gold production. The result is a diversified portfolio of mining royalties that provides stable cash flows and an impressive growth profile. To date, their portfolio consists of approximately 250 royalties on mining projects around the world, with over 40 projects cash flowing and many more in development. They shared their latest quarterly report near the start of May on the 2nd, and they did have mixed results, missing slightly on earnings, but beating on revenue. For their Q1, their earnings per share came in flat at 0, and that did fall 1 cent short of expectations. Revenue did slightly decline by a couple percent to $42.8 million, but that did beat expectations by about $1.4 million. The company did see record cash operating margins and focused on deleveraging their balance sheet, making $20 million in net repayments. One analyst that reiterated their buy rating on the stock following that quarterly report was from H.C. Wainwright. They affirmed their buy rating on efficient operations and strategic asset management, saying that despite a slight decrease in revenue year over year due to lower gold equivalent ounces sold, their cost of sales and depletion costs also decreased, which indicates improved efficiency. And the company has demonstrated a strong commitment to strengthening its balance sheet, evidenced by significant repayments on its revolving credit facility. Sandstorm Gold has 8 current analyst ratings, coming in as a strong buy with 6 buys and 2 holds. And the average price target comes in at $7.31, which would imply an upside potential of 30.5% from current prices. Down below, we can see a list of our ratings here. On the low end, we do have a buy rating from RBC Capital, but it has a downside of 1.6%. We've already surpassed that price target. And the high-end price target does come from H.C. Wainwright at $11, who has an upside of over 96%. If you've made it to our third stock today, this is your reminder to make sure you hit that thumbs up button. Third up, we have Newpark Resources. They trade under the ticker NR, currently priced at $8.11. Year to date, their stock has climbed 22% and in the last 3 months has gained nearly about the same. Newpark Resources provides rentals, products, and services to the oil and gas exploration and production industry. They are a leading provider of sustainable technologies and services, primarily supporting the energy infrastructure markets. They have a global presence in large-scale, long-term markets with business segments positioned across the spectrum of the energy transition. Their two main business segments include their fluid systems and mats and integrated services. They released their Q1 earnings report back on May 2nd as well, and also had some mixed results with an earnings beat but slight miss on revenue. They reported Q1 earnings per share of 10 cents, which came in 5 cents ahead of analysts' expectations. Revenue of $169.1 million did slightly miss by $1.67 million, but they did see net income grow 30% to $7.3 million. And once again, we have an analyst from H.C. Wainwright weighing in on the stock following that quarterly report. They reiterated their buy rating based on solid financial performance and strategic positioning. They said that operating income and adjusted EBITDA for the quarter showed year-over-year increases, which reflect the company's efficient management and operational strength. And they emphasized the sound financial footing of Newpark with a cash balance of $37.7 million and additional liquidity available, positioning the company to comfortably support working capital and growth initiatives. Newpark Resources does just have 4 current analyst ratings, but comes in with unanimous buys. And with an average price target of $11, the upside potential is about 36% from current prices. And you can see we have a tight grouping of price targets here, ranging from a low end at $10, which would still be an upside of 23%, to a high end price target of $12 for an upside of nearly 48%. So there we have 3 strong buy stocks, all priced under $10 per share. Let me know your thoughts on these companies in the comments down below, whether these stocks were on your radar or not, and what you think of their potential. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.